Hello, welcome to MCMGIC. How old are you or how young are you tells a lot about your investment habit, or where you are in life. In youth or in age there's always certain investments you can tap to take the advantage over the power of time. As what Warren Buffett got into the investing game early. He bought his first stock, shares of Cities Service for $38 apiece, at age 11. Since, the investing legend has amassed a fortune of $75 billion and become one of the richest men in the world. When it comes to investing, what crosses your mind first? Contentment, resentment and excitement. Though market changes, insightful investment advice is timeliness. Here's how you can invest at every age, as early as when you enter your youth. The power of compounding yield. As saying goes, sikit lama jadi bukit, which is relatively similar to the earlier you begin, the higher accumulated return on your original investment. Early investment facilitates your entry in the world of wealth early. Your money grows with the time. Because of early participation, you can now afford things which others might not, at that age. This puts you ahead of others who prefer investing at a later stage of life. As Albert Einstein famously said that compound interest is the most powerful force in the universe. He said, compound interest is the eighth wonder of the world. He who understands it, earns it, he who doesn't, pays it. Thanks to the magical compound yield that you can reap the reward. Ramp up your saving. With early age investments, you develop habit of saving more and investing more. The more you invest, the more higher chance you will seize in the future. To follow that thought process, there's no harm of cutting your expenses when you can plant your seed towards your future. Money is a tool. Instead of thinking of the money you earn as the solution to your problems, think of it as a tool you can use to start the lifestyle you want via smart choices regarding spending, savings and investing. You can then divide your tool into short-term and long-term bucket. For short-term investment goals can be a sweet escape holiday or saving for a house, while long-term goals like early retirement or financial freedom, you will want to invest more aggressively and persistently as you have time on your side to withstand ups and downs, as all investment involves risk. For the rest of us who is planning to start their investment journey in media, here's some head-ups. Media. Dive deeper on diversification. Investing in only one category is alarming over the long term. This is where all-important concept of asset allocation comes into play. Having exposure to mid-size companies, established and emerging international markets to get it further diversified into across asset classes that earns higher return and least risk. How much should you own of each asset class? There is no one-size-fits-all best diversified investment. Many people think investment is risky, but the fact it's way risky not to invest. Investing now or later, the earlier, the better. Early investment persistency consistently give you a nest egg later that you can use for major purchases or, better yet, retirement. Start investing in smaller amounts. Give time to your money to mature. In the end, it solely goes back to your risk appetite and the choice is yours. Never fall in love with short-term pleasure. To learn more about how you can grow your nest egg and start your investing journey, please contact MCM today helpdesk.mcm@gmail.com.